A roundup as to what we've gone through so far. What I'm going to do, I'm going to pull up the Astro Forex Roundup points. Now, in the handbook, you have on page 171 a wrap-up of all of the core principles. There's 2 pages there, or 2 sides, and those core principles are ideal for mapping out the overall trend direction, their foundations. Let me just go through this and I'll flip between charts just to give you more of an understanding and go into it in a deeper level. So, Astro Forex Roundup. The purpose for this roundup is to simplify and direct all traders to the most significant tools and entry strategies in the markets. Study the below processes in order, top down, journaling as you go along. So when you come to the charts, blank one, monthly, weekly, daily key levels. Well, monthly, weekly key levels, rounding up the figures, labeling, and so on. You guys, everybody on the one-to-one has done this, and there are some 4-hour videos in the key level section on how to do that. Then you go into your daily 4-hour key levels. You follow the rules there. Remember, you only want 4 overall. Start on the daily, then come down into the 4-hour. Note, yen pairs and gold, you may have to find the majority on the 4-hour time frame. Now you go into the daily and the 4-hour time frames in order to draw on and circle using the ellipse tool any higher highs, higher lows, lower highs, if there are any. I personally put on the last 3 or 4. This helps to establish the trend direction and a potential next move. And it also rules out is a currency pair trade into the upside, downside, or is it simply sideways? Example of that would potentially be, okay, so let's have a look at GA. GA most recently on the daily time frame. It has been swinging. If I get my ellipse tool, let's go on here. Boom. So lower swing highs, lower lows, even there's a lower low over there, lower high, lower low, lower high. All of these have been confirmed either by fib levels or candlestick formations. We've got a lower low over here as well. I'm expecting GA to start to pull back up now as well. So after doing this with the key levels, you have an idea as to where the market has a potential to run to next. Then you go in to take note of the moving averages using the methodology from the MA filtration video, which is the first video in the section. Weekly and daily time frames hold the most significance. You guys, after some practice, make some notes, study, you will get this. You will get this. So if we go back to GA, daily, MAs have been down for quite some time. Okay, we popped up a few times, but we're back below to make new lows, lower swing highs, lower lows. Weekly, down 2. It's only really now because we made that new low that I'm expecting this to pull back. And then on the trend reversal video in the moving average section, it goes into how to spot this, and we're always going to be working on the 4-hour time frame. Had the crossover, potentials now for a long on this currency pair in particular. Fibonacci is the next tool. Applying this tool in line with the overall trend direction, using any of the previously drawn higher highs, higher lows, lower high points as guidance. It is recommended to use only the golden zone, which is explained in detail in the last Fibonacci video, which I've done recently, guys, and I've gone over this on recent webinars too. Take note of the fib target. There's just one. I'm going to be using the -27 now, and I'm using it on the daily and the 4-hour time frames only. So let's look at the euro on the daily. I've been calling longs for a significant amount of time, but I had on there, I had on here before this video, right? So I've plotted on the most recent higher low, and before this move, which came through on the Friday, grab the fib. You can utilize the fib from the low point up to the high point, and this actually responded very well to this region, as you can see right here. To the region, spike through it, reversed, and now I'm looking at that target zone, which comes shy to 1.2, which is one of my key areas of daily resistance as well. So Fibonacci, just use that zone. Keep it short, keep it sweet and simple. Throughout all of the above processes, candlestick formations must be noted. Again, the weekly and the daily hold huge values for the upcoming week ahead and the following day. If you're using trading views, split screen views, it is advised to keep the monthly, weekly, daily over on the right hand side as so. So I flip between the monthly, weekly, daily here, and then I stick to the 2-hour, 4-hour, whatever it may be. And again, if you are going to be using the 8-hour time frame, keep it to the right hand window and keep your intraday over here as well, because your intraday, if you are using the previous day high and lows, that setup right there, see this, the highs and the lows, we want to keep that to the left hand side because it gets very, very messy on the higher time frames. Again, practice. Once satisfied with your analysis, journal, take notes, and once you have experimented on a range of currency pairs, being honest with yourself, take the advice that I gave on the strategic mindset video. Narrow down your pairs as suggested. So again, pick one out of Euro USD, Aussie dollar, and Pound USD. Pick one of those. Pick one exotic. My preference is GBP AUD. I've told you this so many times now. And maybe even one yen pair. If you just have those free, you're diversifying the instruments and you're not trading too many which are correlated with each other. Okay, so once you have practiced the above principles and confidence starts to bloom, you can then start to refine your entry strategies. The top tools to work with are Fibonacci, golden region, candlestick formations, including a 3-pin pattern, previous day's high and lows, and the moving averages strategies. So you have like 1, 2, 3, 4, but you can combine all of them together. And it's only with practice you guys are going to be able to do that. More videos will follow, and again, go back through the webinar recordings when I'm highlighting this in real time. Always remember to be vigilant of key levels. We need to ensure a currency pair has room to run. Remember, I always say and suggest, break the currency pair down, look how far the pair has to run. Okay, using what's above, it isn't really that difficult. Once you get the hang of things and you have the structure, and then you come into the entries, and the entries can be, if you just focus on the MA cross, not the MA cross, the MA breaker, the MA bounce, all right, and then the fib, you're going to get high probability trading setups on various time frames. Follow the stop loss rules from the previous video. 15 to 30 pips above or below the formations. Okay, Fibonacci being 15 pips below the 78.6, guys. Keeping it simple, find your adequate time frame to trade and work with that suits your character and your overall routine. So take a screenshot of this. And that's more or less it. So keep your charts nice and simple. Follow the overlay structures. Go back through all of my work on the webinars. Make sure you join the webinars when you can. Don't forget to take notes, journal, narrow your pairs right the way down. And last but not least, you're looking at the fundamentals around all of this too. So you got your analysis. Stay away from major news events, as we always say and suggest. And you're going to get the most experience with the news by having your charts drawn correctly, following the price action rules, and then seeing how that news actually comes into fruition and plays out. You're going to get a lot of experience from that. So I hope you enjoyed the video so far. Let's go on to the next one. And then it is up to you to study the videos over and over again. Just chart time, chart time, chart time. Do not deviate from anything that we've gone over so far, and you will be okay. Okay, so again, any feedback on any of these videos, anything that you're not quite sure of or understand, please let us know, and then we can maybe cover that at a later date. So on to the next.